Thank you for joining us for another edition of the Optimize Weekly Market Recap. I'm Matthew McGraw, and today we'll be reviewing the key highlights from last week and what we're focusing on moving forward. Markets saw a mixed performance last week, with the TSX leading the way, rising just over 1%. Meanwhile, the Dow, S&P, and NASDAQ all posted slight declines, each down around 0.5%. Despite these fluctuations, the resilience of key sectors and steady economic data continue to support a very positive market outlook as we discuss this week's top company, top sector, and our top asset class. Let's start with Enbridge, which continues to deliver strong cash flow stability with most earnings supported by long-term contracts. Strategic acquisitions and expanding renewables position Enbridge for steady growth, reinforcing its low-risk profile and leadership in the energy sector. Energy was by far the best performing sector last week, rising just over 3%, driven by expectations of regulatory easing under President-elect Trump. With the focus of energy independence through higher production and lower costs, the sector remains very well positioned for continued strength. Finally, U.S. equities remain by far our top asset class, driven by unmatched stability and consistent earnings growth. Key sectors like technology and financials lead the way, supported by a resilient economy and strong consumer spending. Starting with our weekly insights, the U.S. Fed cut rates by 25 basis points and signaled gradual easing in 2025, with the policy rate expected to reach 4% by year-end. This outlook is supported by stronger third-quarter GDP growth, revised to 3%, and inflation slowing to its lowest pace since May. We of course wanted to touch on Canada's inflation, which eased to under 2% in November, falling below the Bank of Canada's target for the second time in 3 months. This slowdown, driven by lower travel costs, easing mortgage rates, and Black Friday discounts, supports the central bank's confidence in its rate cut strategy to stimulate growth. Lastly, their earnings estimates for the Magnificent Seven continue to climb, outpacing the broader market and highlighting their exceptional growth potential. This strong momentum positions these leading companies for robust performance heading into 2025. In fact, on Tuesday, U.S. job openings data will provide insights into labor demand, with markets watching for continued strength after job openings rose to almost 8 million in October. Following this, Canada's December unemployment rate will be released on Friday, highlighting labor market trends after November's rise to nearly 7%, alongside increased labor force participation. Notable earnings this week include Delta Airlines, Walgreens, and Aritzia, offering updates on corporate performance and sector dynamics. Overall, it was a dynamic week in the markets, with steady economic data, easing inflation, and positive earnings momentum supporting a constructive outlook. As we move forward, key labor market updates and corporate earnings will provide further insights into economic resilience and growth opportunities. As always, thanks for tuning in to this week's recap, and we'll see you next time.